Hi everyone. So welcome back to the audit session that we were learning and understanding. So we have reached to the new topic today after the sampling, and that is the audit report based on the auditor's opinion. So we will go deep dive into it, and we will understand that how the audit report is prepared and what are the different types of audit opinion. So as you can see, first is the unmodified opinion, which is the standard audit report. So with on a unmodified opinion, there are two paragraphs, important paragraphs in the auditor's report, that are emphasis of matter paragraph and other matters paragraph. So under emphasis of matter, special purpose framework of the financial statement is reported, justified lack of consistency, going concern, doubt, elevated uncertainty and other circumstances which are optional, and changing prior opinion. These are the matters that are mentioned in the emphasis of the matter paragraph. Whereas under other matter paragraph, comparative affairs, additional circumstances, restricted use of the audit report, all these are mentioned. Similarly, there is also the one of the opinion called modified opinion. So modified opinion are again divided into four types: qualified opinion, unqualified opinion, sorry, qualified opinion except for gap, qualified opinion except for gas, adverse opinion, and disclaimer of opinion. So qualified opinion except for the gap are contains unjustified non-gap or unreasonable estimate, non-gap change, and inadequate disclosure. Qualified opinion except for gas are big uncertainty and scope limitations. Adverse opinion which do not present fairly the gap problem are unjustified non-gap or unreasonable estimate, non-gap change, inadequate disclosure. Similarly, disclaimer of opinion which do not express the opinion of the gas problem are independence impaired, uncertainty, or scope limitations. After this, if auditor finds difficult to provide the opinion, so then they can withdraw from the engagement, providing the genuine reason for withdrawing it. So if we see the overview of the standard audit report, which is unmodified opinion, so there are title contains the topic, that is the independent auditor report, addressee like to the board of the directors, stockholders of the company that we are auditing, report on the audit of the financial statements, so opinion, basis of opinion, substantial doubt about the entity's ability to continue as the going concern, key audit matters, responsibilities of the management for the financial statement, auditor's responsibility for the audit of the financial statement, and other informations are included. After that, the report on the other legal and regulatory responsibilities, and in the signature of the auditor's, addressee of the auditor, and the date of the auditor reports are mentioned there. So, so again, the briefly discussing the title contains the independent auditor's report. So the auditor's report should have a title that clearly indicates that it is a report of an independent auditor. Addressee: the auditor may report it to normal addressed to those from whom the report is prepared. So the report may be addressed to the entity whose financial statement are being audited or to the TCWG. Since the auditor is reporting on the affairs prepared by the management and the auditor needs to be independent, the auditor cannot address the report to the management. When talking about the opinion is if the financial statement is presented in conformity with the applicable financial reporting framework. Also, in the opinion, identify the estimate entity whose financial statement have been audited, state that the FS has been sub-audited, identify the title of each statement that the financial statement comprise, refer to the notes, specify the dates of the period covered by the each FS that comprise, identify the applicable financial reporting framework and its origin. Understanding the opinion section under the traditional 10 gas conceptual framework, so explicit reporting standards and implicit reporting standards are there. So in explicit, accounting policies and expression of opinion is present, whereas in implicit, the consistency and disclosures are mentioned. Also, there is a basis of opinion which states that the audit was conducted in accordance with the gas. Refer to the section of the auditor's report that describes Auditor's responsibility under the gas state the auditor is required to be independent of entity and to meet the auditor's meet the auditor so other ethical responsibility in accordance with the relevant ethical requirements relating to the audit state whether the auditor believes that the audit evidence that the auditor has obtained sufficient and appropriate to provide the basis for the auditor's opinion. So moving forward here, so if there is substantial doubt about the entity's ability to continue as a going concern, so if there is any doubt, the auditor concludes that the substantial doubt about the entity's ability to continue going concern for the reasonable period of the time remains. Auditor is required to include a separate section in the auditor's report under the heading substantial doubt about the entity's ability to continue as a going concern. That does the following. So draws the attention to the notes of the financial statement that discloses the conditions, events identified, and management plan that deals with the conditions or the events and state that these conditions or event indicate a substantial doubt exists about the entity's ability to continue as a going concern. But if the condition or events considered in aggregate have been identified that raise a substantial doubt about the entity's ability to continue as a going concern for the reasonable period of the time, but based on the audit evidence obtained, the auditor concludes that substantial doubt has been elevated by the management plans and adequate disclosure has been made in the FS. The auditor may include an emphasis of the matter paragraph, making the reference to the management disclosures related to the conditions or events and the management's plan related to those conditions and events. Similarly, there is also a key audit matters only when engaged to the audit report. So that in that case, determining the key audit matters, the matters that in auditor's professional judgment were of the most significance in the audit of the affairs of the current period. So these are the selected from the matters communicated with the TCWG. Few of the examples of such matters are areas of the higher assessed RMM or significant risk identified, significant auditor's judgment relating to the areas in the affairs that involve significant management judgment, including the auditor's accounting estimate identified as having high estimation uncertainty and effect on the audit of the significant event and transaction that occurred during the period. GANS does not require the communication of the CAMs on the audit report. Auditor is required to report the CAMs only when engaged to do so. In communicating the CAMs, auditor should describe each CAM using appropriate subheading in the separate section of the auditor's report under the heading Key Audit Matters. So, introduction language in the section of the auditor's report should be state the following. Key audit matters are those matters that were communicated with those charged with governance and in auditor's professional judgment were of most significance in the audit of the financial statement of the current period. These matters were addressed in the context of the audit of the financial statement as a whole and in forming the auditor's opinion thereon, and the auditor does not provide a separate opinion on those matters. Description of the individual CAMs in the key audit matters section should include the reference to the related disclosures, if any, in the financial statement, address why the matters were considered to be one of the most significant in the audit and therefore determined to be in a CAM, address how the matters were that was addressed in the audit. So if there is no CAM, if the auditor is engaged in communicating CAMs but determines based on the facts and circumstances of the entity and the audit that there are no CAMs to communicate, an auditor should include a statement to this effect in the separate section of the auditor's report under the heading Key Audit Matters. Also, CAM is not a substitute for expressing the modified opinion. So, auditor should not communicate a matter of the CAM section of the auditor's opinion when the auditor would be required to modify the opinion as a result of the matter. In the case of the adverse opinion or disclaimer of the opinion, no CAM is to be reported to ensure that the CAM do not overshadow the adverse opinion or the disclaimer of the opinion. Also, communication with the TCWG, auditor should communicate those matters to the auditors has determined to be CAM or if applicable under auditor's determination that there are no CAMs to communicate. Moving forward, responsibilities of the management for the financial statement. So it describes the management responsibility for the following: preparation and the fair presentation of the financial statement and the design and implementation of the maintenance of the internal control to the preparation and the presentation of the financial statement, and evaluate of whether there are conditions or events considered in aggregate that raise the substantial doubt about the entity's ability to continue as a going concern. Moving forward, auditor's responsibility for audit of the financial statement. This states that the objective of the auditor are to obtain the reasonable assurance about whether the financial statement as a whole are free from the material misstatement, whether due to fraud or error, and issue an auditor opinion report that includes the auditor's opinion. This also states that the reasonable assurance is high level of assurance, but it is not absolute assurance, and therefore there is no guarantee that an audit conducted in accordance with the GAS will always detect the material misstatement when it exists. State that the risk of not detecting the material misstatement resulting from the fraud is higher than one from the resulting the error. State that the misstatement are considered material if there is a substantial likelihood that the individual or in aggregate they would influence the judgment made by the reasonable user based on the financial statement. Further describe an audit by stating that in performing an audit in accordance with the GAS, the auditor's responsibility are to exercise the professional judgment and maintain the professional skepticism through the audit, identify and assess the RMM of the FS, whether due to fraud or error, and design and perform the audit procedures responsive to those risks. Also obtain an understanding of the internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. In that case, no opinion is expressed. Also, in the circumstances in which auditor also has the responsibility to express an opinion on the effectiveness of the internal control, in conjunction with the audit of the FS, auditor should omit the following, but not for the purpose of expressing an opinion on the effectiveness of the entity's internal control. Accordingly, no such opinion is expressed. Also, auditor should evaluate the appropriateness of the accounting policies used and the reasonableness of the significant accounting estimates made by the management, as well as evaluate the overall presentation of the FS. Auditor also should conclude whether in the auditor judgment there are conditions or events considered in the aggregate that raise the substantial doubt about the entity's ability to continue as a going concern for the reasonable period of time, or state that the auditor is required to communicate with the TCWG regarding, among other matters, the planned scope and the timing of the audit, significant audit findings, and the certain internal control related matters that the auditor identified during the audit. After that, moving forward, other information which are included in the annual report that relates to the auditor's responsibility relating to the information included in entity's annual report, whether financial or non-financial information. Auditor should include the separate section in the auditor's report, financial statement, with the heading other information or appropriate heading. So state the management is responsible for other information, identify other information, state auditor's opinion on the FS does not cover the other information, state that in connection with the audit of the FS, auditor is responsible to read the other information and consider whether material inconsistency exists or not. State that if based on the work performed, the auditor concludes that the uncorrected misstatement of the other information exists, and if auditor has concluded the uncorrected misstatement of other information exists, a statement that the auditor has concluded that the uncorrected material misstatement information exists should be disclosed. Also, other reporting requirements, responsibilities. So if auditor addresses other reporting responsibilities in auditor's report in addition to the GAS, these other reporting responsibilities should be addressed in the separate section of the auditor's report. In such a situation, the overall audit report is divided into subtitles: report on the financial statement and report on other legal and regulatory responsibilities. um, so there are certain headings such as signature, audit. There should be auditor signature, auditor's addressee, and audit report date in the signature section. So dual date option is footnote, optional for the footnote, and it is not mandatory. Similarly, reference to the auditing standards in the auditor report. So wherever references are required to be given, that should be given in accordance with that audit report. Thank you and bye.